Welcome to Hong Kong Brief. The content of the briefing includes: Developer China South City awaits creditor vote on bond relief. China's Alibaba names CEO Eddie Wu to head its e-commerce business as its growth falters. Alibaba ousts commerce chief, splits assets in new shakeup. Chinese banks hold lending rates as PBOC seen easing in 2024. North Rock grows Asia team with Millennium's Ghosh, Banerjee. Developer China South City awaits creditor vote on bond relief. Bloomberg. China's South City Holdings is awaiting the result of a creditor vote that will determine whether it can extend bond interest payment deadlines or become the latest defaulter in China's troubled property industry. The developer has said it does not have enough resources to pay the interest on its 9% notes due in July 2024, and needs at least 75% of votes to extend the maturity and lower the interest rates. The outcome will test investors' faith in state-backed developers, and comes after Chinese authorities vowed to support distressed developers and curb defaults. China's Alibaba names CEO Eddie Wu to head its e-commerce business as its growth falters. Yahoo! Chinese e-commerce giant Alibaba will replace CEO Trudy Dai, one of its founding employees, with Eddie Wu. The move comes as Alibaba seeks to regain ground from rivals Pinduoduo, which has surpassed it in market value. Wu will head up the company's core e-commerce business, while Dai will work on setting up an asset management firm to improve returns on capital. Alibaba ousts commerce chief, splits assets in new shakeup. Yahoo! Chinese e-commerce giant Alibaba has ousted Trudy Dai, one of its longest-serving executives, as CEO of its Tmall and Taobao platforms. The move comes as part of an overhaul of the company under CEO Eddie Wu, who took over the reins in November, and follows a decision to split the business into 6 divisions. Dai will now help create a company to manage Alibaba's overseas assets. Alibaba, once China's most valuable company, has seen its market dominance eroded by a series of missteps and regulatory scrutiny. Chinese banks hold lending rates as PBOC seen easing in 2024. Bloomberg. Chinese banks have kept their benchmark lending rates unchanged, following a similar move by the central bank. This has bolstered expectations that further monetary easing will take place in early 2024. China's top leaders have signaled that they will maintain supportive monetary policy next year, which economists expect to translate into moderate cuts to policy interest rates and the reserve requirement ratio, RRR. Weak economic data and a lingering property crisis have added to calls for more support for the nation's post-pandemic recovery. However, banks' shrinking profit margins are seen as a key obstacle to further rate cuts, as policymakers aim to support the property sector and local governments while preventing a surge in bad loans. North Rock grows Asia team with Millennium's Ghosh, Banerjee. Bloomberg. Hedge fund firm North Rock Capital Management is expanding its Asian operations with the hiring of former Millennium Capital Management portfolio managers Sayan Ghosh and Nilesh Banerjee. Ghosh will anchor the Singapore presence of the firm and also run a global long-short equity strategy, while Banerjee will be registered to work in Hong Kong. North Rock Capital currently manages $4.9 billion in total assets and has more than 50 portfolio management teams. Forsaken China stocks get a new look by Top Emerging Market Fund. Bloomberg. The Xena Emerging Markets Value Fund has increased its holdings in Chinese stocks, despite the ongoing sell-off in the market. The fund boosted its weighting of China and Hong Kong stocks to around 33% of its portfolio in the third quarter, up from 29% in MSCI Incorporated's gauge of emerging markets. The fund managers believe that the indiscriminate selling of Chinese stocks has created a value opportunity, and they have been buying companies that they believe are cheap relative to their earnings power. The MSCI China Index is down more than 14% this year, and is trading at 10.2 times its 12-month forward earnings. Xena added China Merchants Bank and WH Group to its portfolio in the third quarter. The fund has outperformed 97% of its peers over the last 3 years. China pulls punches to keep pricey electric cars flowing to EU. Bloomberg. Chinese carmakers, including BYD and SAIC Motor, are shipping an increasing number of electric vehicles, EVs, to Europe as they face an oversupply in their domestic market. Chinese EVs sold in Europe, such as BYD's Dolphin compact crossover and SAIC-owned MG Motors MG4, are priced roughly double compared to those sold in China. This discrepancy is due to factors such as low labor costs and generous subsidies in China, as well as additional costs incurred when exporting vehicles, such as tariffs and shipping expenses. The move to export EVs to Europe is an attempt to offset the slowing demand and rising competition in the Chinese market. However, the threat of tariffs being imposed on Chinese EV imports by the European Union, EU, remains a worry for Chinese carmakers. The EU launched an investigation into Chinese support for EVs in October, and any tariffs would impact both Chinese and Western carmakers. The EU's investigation is part of a broader effort by Western nations, including the US, to protect their EV industries from Chinese competition. The Li clan will deal their way out of value trap. Reuters breaking views. CK Hutchison, the Hong Kong-based conglomerate founded by Li Ka-shing, could explore a sale or breakup as it trades at a significant discount to its net assets. Despite efforts by Li's son Victor to boost value, the company's market capitalization of $20 billion is now a 70% discount to its book value, according to LSEG estimates. With 80% of revenue outside Greater China, it may make sense for CK Hutchison to shift its primary listing to another exchange or for the Li family to take the company private with the help of a private equity group. Taiwan's ability to defend against China invasion thrown into question. Bloomberg. Taiwan is facing challenges in preparing for a potential conflict with China, with doubts being raised about its ability to deter or resist an invasion. Concerns have been raised about Taiwan's military size, which has shrunk in recent years, and its level of readiness. The country also faces a backlog in U.S. arms sales, including fighter jets and tanks. Analysts question Taiwan's modernization decisions and the sufficiency of its training, while some doubt the public's willingness to defend the island. However, Taiwan's mountainous terrain and limited stretches of coastline make it difficult for an invading force to establish a beachhead. Taiwan's government is actively exploring ways to strengthen its defenses, including in civil, military, and infrastructure areas. It is engaging with the U.S. to discuss possibilities and adjustments, such as producing drones. However, there is a concern that Taiwan may capitulate or seek rapprochement if attacked by China, particularly if the U.S. is not visibly committed. The island's citizens are relatively affluent and may be less aware of the threat of conflict. Taiwan's political landscape is also a factor, with some presidential candidates more inclined to engage with China than others. Invesco's China CIO eyes double-digit stock rebound next year. Bloomberg. The MSCI China Index could rise by over 10% in 2024, driven by signs of a domestic economic recovery and increased policy support, according to Raymond Ma, CIO for Hong Kong and China at Invesco. Ma expects the gains to be led by improving earnings due to a recovering economy, although he noted that a valuation re-rating would be challenging. Wall Street banks have lowered their expectations for Chinese stocks in 2024 after a year in which the MSCI China Index lost over 14%. However, Ma believes that negative sentiment should be at a late stage and that investors should gain more confidence in China's recovery by Q2 2024. He cited recent positive economic data, including an increase in exports and an unexpected expansion in factory activity, as evidence of the recovery. Asia stocks to track Wall Street's year-end rally, markets wrap. Bloomberg. Asian stocks are set to rise following a rally on Wall Street, with futures for equity benchmarks in Australia, Japan, and Hong Kong pointing to gains of at least 0.5%. traders have ignored warnings from policymakers trying to temper expectations for interest rate cuts by the Federal Reserve. The Bank of Japan held the world's last negative interest rate, but the yen tumbled the most since late October. Bonds have also clung on to gains, with yields on the U.S. 10-year staying at 3.93%. The dollar weakened against all its G10 counterparts except the yen, while oil rose for a second day. We play with our money, so are careful. Is China uninvestable or invaluable? South China Morning Post. Foreign investors are increasingly divesting their operations in China, driven by factors such as the country's economic weakness, geopolitical uncertainty, tightening regulatory environment, and rising labor costs. However, many large businesses still see potential rewards in the Chinese market, thanks to its large economic size, mature industrial ecosystem, and rising middle class. While India is attracting increased foreign investment, it is unlikely to replace China due to factors such as its lack of government support and inability to increase debt. Despite the challenges, some industries, such as healthcare, electric vehicles, and new energy, are expected to continue to attract foreign investment due to increased innovation. Foreign businesses are also facing localization pressure as Chinese consumers become more focused on value for money spending. Multinational companies will need to recalibrate their China strategies to adapt to the new operating environment. While larger corporations still see China as a must-win battle, smaller companies are increasingly finding China less attractive due to the inherent risks and large costs associated with operating in the country. Iranian and Chinese duo charged by U.S. with exporting drone components to Iran. South China Morning Post. The U.S. has charged an Iranian and a Chinese national with illegally supplying microelectronics to Iran for use in its drone program. Hossein Hatifi Ardakani and Gary Lamb are accused of conspiring to purchase and export U.S.-made dual-use microelectronics to Iran. The indictment, unsealed on Tuesday, alleges that Ardakani and Lamb used foreign companies to evade U.S. export controls on sensitive equipment. The U.S. Treasury Department has also imposed sanctions on a network of entities and individuals based in Iran, Malaysia, Hong Kong, and Indonesia, led by Ardakani. The network is accused of facilitating the procurement of components for Iran's drone program. The U.S. has accused Iran of supplying drones to Russia for use in Ukraine, a claim that Iran denies. Inside China's PDD, the controversial e-commerce titan behind Temu and Pinduoduo. Nikkei Asia. Chinese e-commerce platform Pinduoduo, PDD, is rapidly expanding overseas, with its cross-border e-commerce platform Temu topping the most downloaded free app charts in several countries. PDD's market capitalization surpassed that of Alibaba to make it the most valuable U.S.-listed Chinese company. However, concerns have been raised over the sustainability of Temu's cash-burning marketing campaign and the company's relentless work culture. Experts have also highlighted the regulatory scrutiny PDD may face, particularly in the U.S. Uber for logistics, Lalamove enters driver-starved Japan market. Nikkei Asia. Hong Kong-based logistics platform Lalamove is expanding into Japan as the country faces a shortage of parcel delivery personnel. Lalamove's Japan office has started recruiting freelance licensed cargo drivers in Tokyo, with plans to leverage its global brand recognition to attract users. Revised Japanese labor legislation, set to take effect in April, will cap overtime for delivery drivers at 960 hours per year, causing concerns over a logistics bottleneck due to a truck driver shortage. Lalamove, which raised shipping prices during busy times, aims to reduce the time vans spend empty before their next pickup. That's all for today's news from the 6 Degrees world. Let's quickly recap what we've learned. China's South City Holdings is awaiting the result of a creditor vote that will determine whether it can extend bond interest payment deadlines or become the latest defaulter in China's troubled property industry. Alibaba has named Eddie Wu as the new CEO of its e-commerce business as it seeks to regain ground from rivals Pinduoduo. Chinese banks have held their benchmark lending rates unchanged, bolstering expectations of further monetary easing in early 2024. Hedge fund firm North Rock Capital Management is expanding its Asian operations with the hiring of former Millennium Capital Management portfolio managers Sayan Ghosh and Nilesh Banerjee. The Zena Emerging Markets Value Fund has increased its holdings in Chinese stocks, seeing a value opportunity despite the ongoing sell-off in the market. Chinese carmakers, facing an oversupply in the domestic market, are shipping an increasing number of electric vehicles to Europe to offset slowing demand and rising competition at home. CK Hutchison, the Hong Kong-based conglomerate founded by Li Ka-shing, could explore a sale or breakup as it trades at a significant discount to its net assets. Taiwan is facing challenges in preparing for a potential conflict with China, with doubts being raised about its ability to deter or resist an invasion. Raymond Ma, CIO for Hong Kong and China at Invesco, expects the MSCI China Index to rise by over 10% in 2024, driven by signs of a domestic economic recovery and increased policy support. Asian stocks are set to rise following a rally on Wall Street, with traders ignoring warnings from policymakers about interest rate cuts. Foreign investors are increasingly divesting their operations in China due to economic weakness, geopolitical uncertainty, tightening regulations, and rising labor costs. The U.S. has charged an Iranian and Chinese national with illegally supplying microelectronics to Iran for use in its drone program. Pinduoduo, the Chinese e-commerce platform, is rapidly expanding overseas with its cross-border platform, Temu, topping the most downloaded free app charts in several countries. Hong Kong-based logistics platform Lalamove is entering the driver-starved Japanese market to address the shortage of parcel delivery personnel. Now, let's dive into some analysis. China's South City Holdings is yet another developer facing financial difficulties in China's property market. The outcome of the creditor vote will test investor confidence in state-backed developers and the effectiveness of the government's measures to support distressed developers and curb defaults. This ongoing property crisis is a major concern for the Chinese economy and could have broader implications. Alibaba's management reshuffle reflects the company's struggle to maintain its market dominance amid increasing competition from rivals like Pinduoduo. The split of the business into 6 divisions under CEO Eddie Wu's leadership aims to improve efficiency and address the company's missteps and regulatory scrutiny. However, it remains to be seen if these changes will be enough to regain market share. The decision by Chinese banks to keep their benchmark lending rates unchanged suggests that further monetary easing is expected in early 2024. This supportive monetary policy is aimed at boosting the post-pandemic recovery and addressing weak economic data and the property crisis. However, the shrinking profit margins of banks pose a challenge to further rate cuts, as policymakers need to support the property sector and local governments while preventing a surge in bad loans. The increasing holdings of Chinese stocks by the Zena Emerging Markets Value Fund indicate a value opportunity despite the ongoing sell-off in the market. The fund managers believe that the indiscriminate selling of Chinese stocks has created attractive valuations relative to their earnings power. This contrarian view could pay off if sentiment towards Chinese stocks improves in the future. Chinese carmakers' move to export electric vehicles to Europe reflects the oversupply and slowing demand in the domestic market. However, the threat of tariffs being imposed by the EU remains a concern. The EU's investigation into Chinese support for EVs is part of a broader effort to protect its own EV industry from Chinese competition. This trade tension could impact both Chinese and Western carmakers. The challenges Taiwan faces in preparing for a potential conflict with China are significant. The country's military size has shrunk in recent years, and it faces a backlog in U.S. arms sales. There are doubts about the sufficiency of its training and the public's willingness to defend the island. Taiwan's government is actively exploring ways to strengthen its defenses, but there is concern that it may capitulate or seek rapprochement if attacked by China, particularly without visible commitment from the U.S. The positive outlook for Chinese stocks in 2024 by Invesco's Raymond Ma is driven by signs of a domestic economic recovery and increased policy support. The recent positive economic data, including an increase in exports and factory activity, suggests that China's recovery is gaining momentum. However, a valuation re-rating will be challenging, and negative sentiment towards Chinese stocks needs to dissipate for investors to gain more confidence. The year-end rally on Wall Street is expected to spill over to Asian stocks, with futures pointing to gains in Australia, Japan, and Hong Kong. Traders have ignored warnings from policymakers about interest rate cuts, indicating that market sentiment remains positive. However, concerns about potential inflation and central bank tightening could dampen the rally in the future. Foreign investors' divestment from China reflects the challenges and risks they face, including economic weakness, geopolitical uncertainty, and tightening regulations. While some industries continue to attract foreign investment due to increased innovation, others find China less attractive due to the inherent risks and large costs of operating in the country. Multinational companies will need to adapt their strategies to navigate the evolving operating environment. The U.S. charges against an Iranian and Chinese national for illegally supplying microelectronics to Iran highlight the ongoing geopolitical tensions. The U.S. has been cracking down on technology exports to Iran, particularly those with dual-use capabilities. This case underscores the need for vigilance in preventing the proliferation of sensitive technologies. Pinduoduo's expansion into overseas markets, driven by its cross-border platform Temu, reflects its ambition to become a global player. However, concerns have been raised about the sustainability of its cash-burning marketing campaign and the company's work culture. Regulatory scrutiny, particularly in the U.S., could pose challenges for Pinduoduo as it seeks to expand further. Lalamove's entry into the Japanese market aims to address the shortage of parcel delivery personnel caused by revised labor legislation. As the demand for delivery services continues to grow, logistics platforms like Lalamove play a crucial role in optimizing efficiency and reducing empty van times. The success of Lalamove's expansion will depend on its ability to attract freelance drivers and compete with existing players in the market. So there you have it, a snapshot of the latest news from the 6 Degrees world. Now it's your turn. What are your thoughts on these developments? Do you see opportunities or challenges in the Chinese property market, Alibaba's management reshuffle, or the potential conflict between Taiwan and China? Let's hear your ideas and questions. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.